Gold. It has fascinated civilizations for millennia. Its allure is timeless. From ancient empires to modern economies, gold has held value. It has served as a symbol of wealth and power. Kings and emperors hoarded it. Ordinary people traded with it. Gold's history is intertwined with our own. Why has gold endured? Because it is scarce and tangible. You can hold gold in your hand. You can't print more of it like paper money. This inherent value makes gold a safe haven. In times of economic turmoil, people turn to gold. It is a hedge against inflation and uncertainty. Today, gold's importance is more relevant than ever. The global economy is shifting. The US dollar is facing challenges. Central banks are diversifying their reserves, and gold is at the heart of this transformation. For decades, the US dollar has reigned supreme. It has been the world's reserve currency, but its dominance is waning. The signs are everywhere. The dollar has been losing value. Inflation is eroding purchasing power. The national debt is skyrocketing. Why is the dollar declining? One reason is excessive money printing. The Federal Reserve has pumped trillions of dollars into the economy. This has devalued the currency. Another reason is geopolitical instability. Wars, sanctions, and trade disputes weaken the dollar's standing. As the dollar falters, other currencies are gaining ground. The euro, the yuan, and even cryptocurrencies are vying for attention. This shift in the global monetary system has significant implications for investors. Holding on to a weakening dollar could be risky. Central banks are the biggest players in the global economy. They hold the power to influence markets and economies on a global scale. They manage trillions of dollars in assets, making decisions that can affect the financial stability of entire nations. And they are sending a clear message: gold is back. This precious metal, long considered a symbol of wealth and stability, is once again in the spotlight. For years, central banks were net sellers of gold. They offloaded their reserves, believing other assets were more lucrative. But that trend has reversed. They are now buying gold at a record pace. The question arises, why are central banks stacking gold? What has changed in the global financial landscape? They see it as a safe haven asset. In times of economic uncertainty, gold provides a sense of security. They are concerned about the dollar's decline and global instability. Gold provides a hedge against these risks. It is a tangible asset that is not tied to any one currency or economy. Its value is recognized worldwide. Examples abound of central banks adding to their gold reserves. This trend is not limited to one region or economic bloc. China, Russia, India, Turkey, and Poland have all been major buyers. These countries are making strategic moves to bolster their financial security. These countries are diversifying their holdings and reducing their reliance on the US dollar. By doing so, they aim to protect their economies from potential shocks. Their actions speak volumes about the future of finance. As central banks continue to accumulate gold, it signals a shift towards more traditional and stable forms of wealth preservation. The US government's policies have contributed significantly to the dollar's decline. Over the years, various economic decisions and strategies have had a profound impact on the global perception of the dollar. One major factor is the freezing of foreign assets. This action, often taken as a measure of economic control, sends a strong message to the international community. When the US freezes the assets of other countries, it undermines trust in the dollar. This erosion of trust is not just a minor issue. It has far-reaching implications for global financial stability. Countries become wary of holding their reserves in a currency that can be easily seized. The fear of sudden asset freezes makes nations reconsider their reliance on the dollar. Another significant factor is the weaponization of the dollar. The use of the dollar as a tool for economic warfare has been a double-edged sword. The US has increasingly used sanctions as a foreign policy tool. While these sanctions aim to exert pressure on targeted nations, they also push these countries to seek alternatives. This has led to a growing desire among some nations to find alternatives to the dollar for international trade and finance. The search for more stable and less politically influenced currencies is intensifying. The BRICS nations, for example, are developing their own payment systems. These actions have consequences. By creating independent financial networks, they reduce their vulnerability to US economic policies. The dollar's role as the world's reserve currency is not guaranteed. The global financial system is dynamic, and shifts in power and trust can lead to significant changes. As other countries lose faith in the US financial system, they are turning to gold. This shift is a clear indicator of the growing uncertainty surrounding the dollar. They see it as a neutral and reliable store of value. Gold, with its historical significance and stability, offers a sense of security that the dollar currently lacks. Section 5. Why gold? A safe harbor in uncertain times. In today's uncertain economic climate, investors need a safe haven. With market volatility and economic instability becoming more frequent, finding a reliable store of value is crucial. Gold has always played that role. It has a long history of preserving wealth. For centuries, civilizations have turned to gold as a means of securing their financial future. From ancient empires to modern economies, gold has been a symbol of stability and prosperity. Unlike paper currencies, gold cannot be printed into oblivion. Its value is not dependent on any government or central bank. This independence from political and economic systems makes gold a unique asset. While governments can manipulate their currencies, gold remains steadfast. Gold is a hedge against inflation. When prices rise, the purchasing power of paper money erodes. Inflation can eat away at savings, reducing the value of hard-earned money. However, gold tends to maintain its purchasing power over time. But gold tends to hold its value. In fact, gold often rises in price during periods of high inflation. This makes it a reliable asset for preserving wealth. Investors often turn to gold when they anticipate inflationary pressures. This makes it an attractive investment for those looking to protect their wealth. Financial advisors frequently recommend including gold in a diversified portfolio to mitigate risks. Gold is also a hedge against geopolitical risk. In times of global uncertainty, such as wars or political unrest, gold's value often remains stable or even increases. Wars, terrorism, and political instability can all lead to market volatility. These events can cause significant disruptions in financial markets, leading to losses in stocks and bonds. During such times, investors often flock to safe haven assets like gold. The demand for gold typically rises, driving up its price and providing a buffer against market downturns. Gold's price tends to be less affected by these events than stocks or bonds. Its stability makes it a cornerstone of prudent investment strategies, offering peace of mind in turbulent times. Section 6. Gold versus the rest: stocks, bonds, and bricks. How does gold stack up against other investment options? Let's compare. Stocks can offer high returns, but they are also volatile. Their value is tied to company performance and market sentiment. Bonds are generally considered less risky than stocks, but they offer lower returns. Real estate can be a good investment, but it is illiquid. It can be difficult to sell quickly if you need cash. Gold, on the other hand, offers a unique combination of stability and potential upside. It is not correlated with other asset classes, meaning it can move independently of stocks and bonds. This makes it a valuable portfolio diversifier. Section 7. The allure of gold: more than just money. Gold's appeal goes beyond its monetary value. It has a cultural and emotional significance that other assets lack. For centuries, gold has been associated with wealth, power, and prestige. It is a symbol of enduring value. This emotional connection makes gold a popular choice for jewelry, art, and religious artifacts. It is a tangible asset that people can see and touch. This gives it a sense of permanence that paper money lacks. In a world of increasing uncertainty, gold offers a sense of security. It is a physical reminder of something of value. This emotional appeal should not be underestimated. It is a key reason why gold has remained a sought-after asset for millennia. Section 8. Gold Investing 101. What you need to know. There are several ways to invest in gold. Physical gold. You can buy physical gold in the form of coins, bars, or jewelry. Gold ETFs. You can invest in gold ETFs, which are exchange-traded funds that track the price of gold. Gold mining stocks. You can invest in gold mining companies. Each option has its own pros and cons. Physical gold requires storage and insurance. Gold ETFs have management fees. Gold mining stocks can be volatile. It is important to do your research and choose the option that is right for you. Section 9. Weighing the scales: the pros and cons of gold. Like any investment, gold has its pros and cons. Pros: safe haven asset, hedge against inflation, portfolio diversification, tangible asset, historical track record. Cons: doesn't generate income, storage and insurance costs. Price can be volatile, not a guaranteed investment. It is important to weigh these factors carefully before investing in gold. Gold is not a get-rich-quick scheme. It is a long-term investment that should be part of a diversified portfolio. Section 10. The future of finance. Is gold your golden ticket? The global financial system is at a crossroads. The dollar's dominance is waning, central banks are turning to gold, and investors are looking for safe havens. In this environment, gold is well positioned to play an increasingly important role. No one knows for sure what the future holds. But one thing is certain, gold has stood the test of time. It has been a store of value for thousands of years, and it is likely to remain so for generations to come. Whether you are looking to preserve wealth, hedge against inflation, or diversify your portfolio, gold deserves your attention. It is a time-tested treasure that can help you navigate the uncertainties of the modern world.